Well, thank you very much, and it's a real pleasure to be here. First, I'd like to send a very important thank you to the Alan B. Levan Center and Nova NSU Center of Innovation that's sponsoring this panel and gave me the opportunity to moderate with these distinguished speakers. So I'd like to welcome my panelists. Thank you so much for coming. You had some initial intros. What I'm going to do is allow them to, when I ask them their first question, kind of allow them to give a background on what they specifically do. So thank you so much and welcome. So as the topic that we're covering today is about fintech and traditional financial institution collaboration, and I'm sure you can tell who the former banker in the room is by the way we are dressed. So I just wanted to ask some questions about, what is it that they're working on? What are the general challenges that they're facing? What are the positives, the negatives? How have they worked through many of the industry-related issues that they're facing? And the fact that they really bring much more dynamic capabilities to the traditional financial institutions. So let's dig right in. Okay, so I'll start with Hannah. So Hannah Zupko. When you look at all of these projects how you've been working on, to me it's always been about there's the build versus buy. What motivates the traditional institution to, bring in a third party and decide I don't have the capabilities? What have you seen in that regard so far?
Thank you, Jairo. Well, to introduce myself, Hannah Zupko. I'm co-founder and CEO at Intellect.eu. We are a software and services company that serves 7 out of 10 biggest financial market infrastructures around the globe. So to give an example, we are working with SWIFT. We service the 11,000 institutions as an enabler to modernize their payment infrastructure. We are also D7 digital market partner for Deutsche Börse Group. So typically, we work with those large enterprises. And also, we have a lot of experience in the emerging technology space. So we have built and joined as a founding member to the Global Synchronizer Foundation, that is a governing body for Canton Network. And typically, observation, so I can really speak working with financial institutions, working with emerging startups and scale-ups. And typically, when we engage with banks, is time to market is one element that FinTechs can bring that are unparalleled, because really you can launch a network, a blockchain network in a matter of days, even with our technology, like Catalyst Blockchain Manager, whereas under normal circumstances, first you need to hire people, train them, bring them up to speed on the technology. It can take weeks and sometimes months, right? Plus having that talent, it's so scarce, right?
Right. And I've noticed even in your projects, you've worked with some of the largest financial institutions in the world that you would think would have the resources to hire and to do this internally, but it seems like they see a lot of value in what you can bring.
Well, and build versus buy, right? It's an eternal story. Where it comes to the core, to what organizations do, they very often want to build and retain IP and make sure they're not dependent on any third-party vendor, especially not the startup. Where it comes to the broader type of applications, think everything outside of the core, you can use AI, right, for your workflows in HR or in legal, and we currently build that also for some of our clients, right? So we see both. And another last point to mention, throughout 2024, I did see a lot of shift from capital expenditures towards working more with FinTechs. And I think it's also that just overall macro environment has caused, there's no appetite to spend $3 million in building another tokenization platforms that you can use open source for, partner with a FinTech, right? And it's much more what can you bring to the table so we can go live in 3 months with our idea and showcase for all the stakeholders and bring it to market.
No, thank you so much. Very insightful. I want to hop over to Jose, because obviously you're working with traditional financial institutions, you're working with other types of corporations to tie a lot of the elements on blockchain together, especially in Bitcoin Lightning. And you assist with infrastructure, you assist with integration. So tell us a little bit about how it's worked with you in the financial institutions or the traditional financial sector.
Well, first of all, it's super interesting, but before I go into it, let me just give a little bit of background for everybody here who might not know of us. We basically are leveraging blockchain blockchain technology, in the specific case of Bitcoin, to do cross-border settlement without any credit or counterparty risk. We believe this is a huge change in paradigm from what we've been used to so far, because what I would say is all of our financial system is run on credit today. And it's run on credit because it has to be run on credit, especially when you're coordinating multiple databases across jurisdictions. There's no real way to get away from that until, blockchain and digital assets have come along. So I think we're at the start of a paradigm shift in how we do global value transfers, and that is what we're focused on. Now, telling this to banks and fintechs and other institutions, it's a little an educational challenge, because again, it's a changing paradigm, and we have to break down a lot of concepts and a lot of jargon that's very specific to blockchain and that technology, and kind of bring it down to their level, and meaning not their level, but rather
that they can understand.
Phrase it in ways that they're used to, right? Because a lot of this, blockchain sounds very sophisticated, but at its core is just a very specific type of database. And you can treat it as a database.
Correct.
So a lot of what we do is education, but I think there's a lot of appetite. When you talk to banks, when you talk to fintechs, and you tell them we can move value faster for less, no credit, they listen. Now, between that and actually implementing a solution, it takes a long time, the bigger the institution is. So I like to think of institutions as kind of like boats, right? And so let's say, to take an extreme example, somebody like Citi or BOA, right? Those are huge, like carrier type boats. They take forever to turn, right? You take a startup, a scale up, and that's like a dinghy, and it moves like this, right? So there's pros and cons to both.
Thank you.
I have to say.
Thank you. I want to jump over to Elon. So Elon, basically, and you'll explain in more detail in a second, but you do a couple of things. Not only do you provide an infrastructure for use by the ecosystem, a blockchain infrastructure for the whole ecosystem, but you are surrounded by supporting fintechs that are helping you enable all of the different use case applications, different applications and use cases that you have on your blockchain. So tell us a little bit about how do you coordinate all of that and what you're bringing to the table and what LikeChain is doing today.
Thank you, Jairo. And first of all, I'm part of the LikeChain team, which is an initiative led by the Inter-American Development Bank in order to provide a blockchain network that governments, financial institutions, startups, and many other organizations can deploy their use cases. The vision that is behind of all this effort is how we can accelerate the adoption of blockchain and Web3 solutions, because we see a lot of value in the transformation, digital transformation in our societies. So that's why we have created this ecosystem that is I would say like business-oriented ecosystem, where all the participants are looking like how we can take advantage of the opportunities of the region. So there is a business motivation behind of it, to be part of it. And the other motivation is how we can put innovation to the service of the people, right? So one thing is like helping organizations to make sure that they are like tackling a specific problem, and that problem is actually validated and is going to provide value. And the other thing is like, and one way to do that is like making sure that you have a customer, right? Or that you have several customers that are willing to pay for your services or your product. And the other thing is like how we can help them to, one thing that Hannah mentioned is like ready to market, like how we can help to make sure that their product is actually ready, right? It's not easy for many of the startups that are working and developing a new product to develop a product that is in compliance with the regulations, because there are a lot of things that they need to consider in their journey. I can find a way to solve one problem that I have identified, and I can easily fix it. But when I need to consider that there is a component that is related with the government, some other industries, regulators, some other legislations applicable, well, that's when the things get messy, right? And we need to find some alternatives to help them.
So it's a great segue into my question for Clayton, because obviously you talked about compliance and making sure things are done correctly. And at Chain AI, obviously you look at a couple of things, right? So getting that forensic information on who's doing what, who's behind the transactions, but more importantly, for example, compliance of the smart contracts. How effective have they been written? Do they really do what they're supposed to be doing? Can you talk a little bit about what you guys do as well?
Yeah, so Chain AI provides software, and nice to see you all. Thanks for coming. I'm a solutions director at Chain AI, and what we do is build software and provide software consultation services, including custom development work, designed to bridge the analytics gap between regulatory and law enforcement stakeholders and private sector stakeholders who are responsible for safely developing blockchain infrastructure into their traditional architecture. So for us, when we're looking at a traditional blockchain transaction, like a Bitcoin transaction, for example, this is typically going to be a peer-to-peer transaction. So applying, for example, AML, CTF type analysis to those transactions is a little bit more straightforward.
Sure.
Our technology can certainly enable that. But through our work in the public sector, we really developed a specialization around smart contract analytics. And for those of you familiar with smart contracts, maybe you're not, they enable programmatic execution of what are usually complex financial transactions. So we go from Bitcoin, which is a peer-to-peer transaction traditionally and typically, to a smart contract enable borrowing, lending, any financial service or procedure is going to be underpinned by that smart contract. So that means our technology has to be agnostic such that if the regulatory environment changes, the technology still does its job. So regardless of what the SEC is doing over the last 4 years versus what it may do over the next 4 years, this technology is going to help the stakeholder understand what's happening on chain and how that relates to the framework, right? So often what we're doing is helping folks understand what particular types of transactions and the code that enables those transactions in the context of a smart contract, how that actually works versus how that's marketed, right? And which it's very important. So that's step one. And then step two is whether or not there's a regulatory environment that is clarified, you either need to prepare for what will happen or align yourself with the law as it is. Right. So the technology enables that.
Right, excellent. So I'm gonna for a second put on my old banker's hat, right? And I'm gonna see you guys walking into the room. The first thing that I'm gonna ask is, well, sounds beautiful, everything that you do. What about data privacy? What about security? What about integration? How do you manage that? So share with me some of your experiences about, when you walk into a room, this is what I can do. What is the pushback typically? What are the strong pushbacks on security, privacy, et cetera?
Well, one of the key challenges that we always see with banks is where is it hosted? How can we ensure full control of our data? How can we ensure that the startup doesn't go out of business, right? So there's just a lot of concerns and hesitations at first, but typically, again, we work with emerging technologies, right? So with blockchain, digital assets, AI, quantum, that actually is an advantage because we can very quickly, prototype in a regulatory, like not putting the production systems at risk. We can really do what we need to do in the sandbox environment, and then once everything has been properly tested, prepared, move it into production with the right levels of security and controls. As a company, like we're, for instance, certified with ISO 27001. We also adhere to SWIFT CSP, Customer Securities Program. Every year we recertify. So there's a lot of things put in place that make, for instance, Intellect.eu as compliant, right, to all the best practices as the bank itself. Because again, there's functional and non-functional requirements.
Sure.
But then, part of your question was also around going and convincing, right, the stakeholders. And we typically do that in a step-by-step approach. We would bring everybody for a workshop, right, and showcase really how quickly they can move the digital agenda forward by essentially not trying to build everything from scratch. The reality is that also, like from cloud readiness, many banks, like every time we talk about integrations, they say, oh, let's put our integration product, like we run Catalyst Integration Manager in the cloud, but then very quickly when we start to implementations, they start saying, oh, but we don't have Kubernetes as our part of our stack. So there are challenges that we need to overcome, but we typically meet our customers wherever in their cloud journey they are, wherever non-functional requirements they put in front of us, because we understand we've been in this business for 18 years, right? We've seen a lot of those transformations.
Excellent, thank you. Yeah. So Jose, we had a chat about data privacy and personal information, the PII challenge.
Yeah, well, we have a big advantage in the sense of how we architected the solution and the lightness of the information that needs to be contained in, let's say, a settlement transaction versus, a payment transaction or something that's more retail-oriented. So the way we architected it and you consume our service through APIs, on purpose this way to play nice with any infrastructure. What you said, we can build it as complex or as simple as our customers demand or require. We do depend on our customers to do a lot of the heavy lifting in terms of the PII section because we're more of a very light messaging system, if you will, right? So financial transaction messaging system. And so we don't keep any PII internally. Now, how we handle that to make everything compliant on the AML, KYC, all of that side, right? That really depends on a case-by-case basis and what our customers need and how it's set up specifically for them.
And I want to ask, let's go to Clayton. In terms of the cultural challenges when you're doing your implementation, right? You're coming in with new technology. It's a completely change of a dynamic, agile culture to the typical legacy system. How am I going to change procedure kind of approach versus being dynamic and pivoting? So could you share perhaps any of those discussions in terms of the cultural differences that you've run into? Have it been easy to navigate or not?
So they're easy to navigate when they're easy to navigate, right? So, and that's just a function of how prepared and how earnest is a prospective financial institution, regardless of its size. How serious are they about implementing these technologies, right?
Interesting. How serious?
So, to the degree that an institution is working on a use case, that's going to be an easy conversation because they know what problems they need to solve. You're in the room to explain to them how you can fit into that, right? And then provide insights, maybe, in our case, from the public sector, given that those relationships have been developed prior to the compliance situation becoming more clarified, right? So even back in the Wild West, when it's still Wild West, but earlier Wild West, when the government wasn't necessarily sure about its stance, there is still an effort to look at the space, regardless of what the end game is, right?
Yeah.
So those types of conversations carry over into the private sector indirectly. But in the cases where maybe an institution or a bank isn't necessarily sure of the use case, they don't have a problem they want to solve, at that point, it's an educational engagement, right? So you're looking for a problem that they don't know could be solved.
Correct.
With this type of technology, right? So that could be difficult if you're trying to force a use case, right?
Yeah. We've mentioned kind of like putting it in the terms that they understand, right? And that clearly helps things. And I remember a conversation that I had with Elon early on, and I'll go back to this conversation, because some of the things that he's done is, for example, a bond issuance on a blockchain with a Latin American bank. And one of the things he showed me is when you look at that transaction outside and you look at all of the information, where you get the information, you can't see a difference. So tell me a little bit about that bond issuance that you did with Da Vivienda, and how you kind of spoke. Look, it's really a little of the same, but with a different flavor to it.
Yeah, and it's actually what the technology should be, right? The technology should be something to make our life easier, and not like the opposite, right? So in Web3, we are still trying to define what the user experience is going to be. There's a lot of terms or issues related with security and stuff, but in terms of the user interface, the experience of any typical user should be even better than what they have right now. So the experience that we had in Colombia, actually, and in Spain with Bolsas y Mercados, is the issuance of or the tokenization of a bond. The financial bond I'm talking about, and it's very important because it's democratic, making democratic the access of this bond to masses. Right now, it's pretty much dedicated to institutional investors.
Right.
But if we are able to tokenize this successfully, this bond is going to be accessible to anybody, right? So the idea of providing this seamless experience to the user is key and essential. That will take me to talk a little bit about the privacy. Probably the biggest concern that all these enterprises and institutional companies is actually related with the privacy. And the way that we need to navigate through those challenges is basically building, in some cases, creating a specific environment for them. And trying to consider all their concerns, including, for example, quantum resistance applications and stuff, right? So it's not only the user interface, it's also what is behind of it. Yeah.
Excellent. So we tried to discuss a lot in 25 minutes. So I'm going to close out with a very quick lightning round question. What is the biggest misconception that you think traditional institutions have about fintechs? Hannah, first.
If I...
Oh, you, Jose.
Oh, no,
yes.
no, Hannah, please.
No, you can go ahead.
Oh, well, to me, it's that a lot of focus has been put so far on the assets that are enabled by, big blockchain technology and these, new frontier. But I think what's way more interesting is what's going on underneath. And I want to be quick here to give everybody a little bit, not a lot of chance, but core takeaways are the technology, to me, is even more interesting than the assets that are enabled. It's what I call it is it's going to be atomic finance, and then a lot of privacy concerns can also start to be reduced, because as you make finance smaller or more granular, you don't need to have such a high barrier of compliance, because it's not worth it, right? If you're having $5 transactions, how much KYC do you need to do? And I think I'm very excited.
Yeah, we're going to wrap up very quickly.
Yeah.
Hannah, very quickly, one sentence.
Misperception, I would say that fintechs are competitors. My sense is that fintechs are much more driving force to lift all boats and actually drive innovation.
Great. Clayton?
The biggest misconception is the need for an all or nothing approach. It either solves all your problems or won't solve any of your problems.
Excellent comment.
I agree with Hannah. The biggest misconception is fintechs are our competitors,
Okay.
and how we can work together is actually
Excellent. Great closing. It's obviously all about the collaboration. That's what this session was all about. So these last comments are very appropriate way to round things out. Again, thank you very much to everyone, to all my panelists, to everyone for being here, and a special thanks again to the Alan B. Levin Center for allowing us to have this session today. And please look them up and be in touch with what they're doing. They're doing some very, very exciting things, and pass by their booth when you get a chance. So thank you so much.